Welcome back to Financing Flow, helping CFOs building smarter, more insightful, and more connected finance teams. I am your host, Catalina Gutiérrez, Senior Consultant at Lucanet. Today, we are diving into a critical question for finance leads. How do we balance investment growth with the need of profitability in a world of shifting priorities and increasing pressure to deliver results? How do finance leads make the right calls? To help us unpack this, I am joined by two fantastic guests, Alistair Gurney, CFO at Lucanet, with deep experience in strategic planning and decisions making under pressure, and Sanja Mitrovic, auditor and business planning expert from Kleeberg, who brings a unique lens on how planning impacts credibility, compliance, and long-term success. Let's begin. In today's volatile market, CFOs face the constant tension. Should we invest in growth or focus on profitability? On how we can plan both intelligently and flexibly? Alistair, how do you approach this dilemma as a CFO?
Firstly, hi Catalina, it's great to be here. I think that the balance it varies on the business you're in. Depending on where you are in the life cycle of the business, you might have a requirement to generate as much cash as possible. You might have a requirement to achieve growth at all costs in the hope of driving a longer term value, or you might be trying to push for an exit quite soon and be pushing for profitability right now. So I can't tell you where your business would be, but I know that in all cases, you're probably driving to get as much productivity as possible out of the resources you have. So you're still trying to make good choices, whatever the objective of those choices are. So I think that, yeah, the question is how can you make the right investment decisions to get the most from whatever it is you are doing? And that I would focus on that rather than either one of the objectives you mentioned.
Okay, yeah, sure. And Sanja, so welcome as well. And from your perspective as an auditor, how does more integrated business planning approach help address this challenge? I know that you use the concept of planning plausibility. Can you please explain us what is that means?
So, hi everyone, thanks for having me. For sure, I think to highlight, like from an auditor perspective, the main question we are always dealing with is the planning plausible or even too optimistic? So I have seen a lot of planning modules which were not plausible at all, and even though it tend to be too optimistic in order to achieve some management goals. So therefore, as from an auditor perspective, I'm always asking myself, who are the stakeholders that require these plausible plans, and definitely what methods can be used in order to verify whether this plan is plausible or not, especially as from an auditor perspective, which the auditor usually is aware of the company's process, but is not that deep dive. So it's definitely to say what is challenging is there is always what we observe a kind of a lack of integrating planning approach, which then tended to be overly optimistic. There are different departments working on the plan, operation plan, which then needs to outflow in a kind of a financial plan, which then needs to be based on the same assumptions and macroeconomics facts and whatever. So talking about plausibility, definitely it helps to have some kind of method. So taking a look back on the actuals or the plans from prior years, having them compare to the actuals in order to see was the plan too optimistic. We are using a lot of scenario analysis and peer group analysis to see is this plausible as well, so external information in order to do this plausible check. And when we are facing, for us as an auditor perspective, it's pretty crucial as well to have a good planning, especially when it comes to the going concern assessment or company's valuation, which are the main base for a lot of accounting principles as well. But you see, I highlighted a lot of challenges. I'm pretty sure we will go through in this podcast as well.
So let's take a moment and talk about what we mean by business planning approach, like extended planning and analysis, or we can also call it XP&A. For those who maybe are new on the concept, so XP&A built on traditional finance planning and analysis, which has historically focused mainly on finance, but today business environmental demands more, basically. So unlike FP&A, finance planning and analysis, XP&A, the extended planning and analysis, connect planning across department, for example, finance, operation, HR, sales, logistic, and much more, creating a shared real-time view of business. It removes barrier between teams and enables cross-functional collaboration, helping organization move from a static, disconnected budgetage to a more dynamic, integrated, and forward-looking planning process. So it is not just about numbers, it is about aligning people, processes, and data across organizations to support better, faster decisions making. So, Alistair, one of the promises of more integrated planning approach is that it is offer 360 degrees view of business performance, allowing for continuous monitoring and a unique approach to decisions making. From your perspective as a CFO, how has having that kind of visibility changed the way you lead or make strategical decisions?
So we try and maintain a very clear view of operational data, which is not purely financial. So I'll give an example maybe to explain it. So we'll have a lot of detail that comes from our CRM system around our funnel and the funnel dynamics, so the conversion rates and the time in stage between each stages of a deal. And we can slice and dice that depending on the source of the opportunity and who is managing that opportunity and where it is in the pipe. Having access to all of that data alongside the purely financial outcome of what was the revenue you got at the end of the deal means that we can see when there is a disconnect in the evolution of that funnel behavior versus, say, the level of marketing investment we've made, which might have been more of a historical pure financial measure. Seeing that disconnect allows us to take action, and far more nuanced action than if we merely saw that we've spent some money and not got a return yet. So in a previous life, I might have said, we haven't seen a return on increasing our marketing spend in the last 6 months, so we'll reduce marketing spend for the next 6 months. Whereas now we can see the issues forming in the pipeline early. We can see in which regions or in which products or in which channels they're forming and reallocate marketing spend to try and get the best return we can. So we're able to respond quicker and in a far more flexible way than we could have done if we had only had sight of what have we spent and what was the revenue a year later.
That's a really great example. Thank you. And Sanja, one concept that it came in modern planning is the idea or single source of truth, right? Having one consistent, reliable data sets that everyone in the organization works from. From your perspective as an auditor, why does it matter so much? And what kind of risk do you see when companies don't have that kind of consistency in their planning and reporting?
Yeah, good question. So just to say a single source of truth when we're facing clients which using platforms, for example, like XP&A can be, or different kind of platforms which generate and enables them to have a single source of truth, I would say then I'm lucky from auditor perspective, because then I always see and there are a lot of like integration happening coming from the operational planning and then outflowing in the financial planning, because the main risk and challenge we are facing and seeing for our client as well so far using a manual Excel-based planning is that a lot of like departments which are working on the operational plans are working on different, or the information is coming from different sources, internal and external sources. So often we observe that they don't communicate with each other, make some same assumptions and sources, especially from the external resources used are not on the same base, and therefore brings a lot of challenges when it comes to plausible checks. So having them everyone on on one platform, forcing them to challenge those plans is really helpful from auditor perspective as well, to at the end see a pretty consistent financial plan, which is then a balance sheet, P&L, and a cash flow. And I think what is pretty important to highlight here as well is that usually a normal planning process is not a process which is only performed one time. I think there are some more plans sent it out, prepared to the controlling department, then been discussed with the management, and some changes from the management been pushed down again, and a lot of amendments are needed in here. So when the process is pretty manually, I think it's really not an efficient process. You lose a lot of time, where time is pretty important when it comes to planning, and especially a lot of wrong assumptions or not plausible assumptions are leading to a wrong plan at the end, which is used as a decision paper for the management, and then can lead to wrong decisions, definitely.
I see definitely the connection between what you are telling us and the example of Alistair before, right? Like, is this it's only possible to have this plan, if this really good finance plan, if we have this integrated source, single source of truth, right? So it's really important. So this is the time for my favorite question of the hour. So let's talk about innovation. Artificial intelligence, the topic of the hour. So AI is not longer just a trendy term. It's actually transforming how we approach planning and decisions making in finance. From your seat, so you both, how is AI beginning to influence the way finance is planned today?
Yeah, I think it's when it comes to AI, it's really powerful to observe. I think that you can use the power of AI in order to have predictive modeling, which tend to be more accurate, and the speed of planning can definitely be improved here. I think what I observed so far is really helpful in order to identify patterns and trends, specifically when it comes to some industry facts or branches analysis. When it comes to sector comparison, it as well can help on maybe generating some automated suggestions when it comes to assumptions, and to check on those assumptions being used being used as a variable for multiple scenarios or for multiple operational plans. So a lot of challenges I observe from the market here as well is that you really need to do a lot of change management and generate trust in AI, because definitely data quality and data availability is still a challenging part. But at the end, it's pretty important, and I think there is a lot of development here observed.
But I think we're already using it, obviously, for the research type tasks you described, Sanja. So that ability to get benchmarking data and so on, of course, we're using that to inform our planning. But I think we go a little bit further into the practical use in management, which is I will, or one of the team will quite regularly be taking a data set or several data sets, putting that into a tool. I quite often use Claude for this. And actually using that to do the first stage of analysis and look for trends in data which you wouldn't necessarily have spotted. If you did that analysis purely in Excel, you'd probably be testing a single hypothesis or a single correlation at a time. Whereas by throwing a load of data into a model, you can actually let it look for correlations which you may not have tested, let alone noticed. And that we've had situations where the output from that has kind of given us a more detailed hypothesis, which we then go away and test with structured data, and we build a dashboard, and we turn it into part of our regular reporting, which we can do in a scalable and repeatable way. So I mean, we do that with a lot of quota coverage analysis and this kind of thing, quota carrier performance. I think the thing I would stress there is we're still having to build it in a repeatable way. So what you're getting from LLMs is great, but it's not always possible to fully recreate the answer. So we're still using it as a way of finding what we need to look at and then building in a more deterministic way that analysis so that we can repeat it and have a consistent data set through time. I feel like that next step will be that we can start to use the artifacts created in the LLM to actually drive that repeatable analysis in future as well.
Yeah, I think we are not yet there, right? But just let's imagine for a moment, what if finance teams could one day rely on AI? Just not as what we have talked about to automate reports or forecasts, but to guide strategic choices, like exploring new markets or reconstruction of a part of the business. Do you think we are moving in that direction? And what will need to happen that the finance leads truly trust AI at that level?
So I think we are going in that direction. I think that the trust comes from repeatability and visibility of what's happening inside the black box. I think over time you see it working and you see it working time and time again and you start to trust it. I mean, I don't really know how I can drive effectively, but I do now trust myself to get down the road without hitting the pedestrians. No one's interrogated the inside of my brain to work out how that happens, but we kind of believe that we can each do it, and therefore it's safe to drive together. So I think that repeatability is really important, but we are. I don't think anyone is particularly keen to take the human out of the decision-making loop. So the idea that the AI drives the strategy, I'm not sure I'm so keen on pushing that idea. On the other hand, can I have AI-driven analysis informing my decisions? Well, as I said, we already do that. So we're using AI to find correlations, to find what are the real levers in a situation, and then we're making the decision to pull those levers accordingly. So that's already happening, I think.
And Sanja, I think that's a really crucial topic, like the trust topic, right? And AI for auditors. How did you see that?
Yeah, it's a really interesting topic as well, like how, as we as an auditor can use AI and rely on AI, even though our responsibility to create opinions. I think it's a really challenging part, even though when it comes to legislation and so on. But what I observe, and in my mind, actually, it's like more a shifting of capacities. So definitely, we are there right now that AI can definitely help in analyzing a lot of informations, assumptions, data analytics, which at the end maybe is the usual job and controller was performing so far, or like even an assistant or consultant on my jobs. So it brings new capacity and we can focus more on data validity. And I think at the end, it's not replacing or be replaced by AI, is more using more new capacity in order to challenge those numbers and to get better informations and data and higher data quality in order to generate trust. I think it's a pretty fast growing area, and I'm pretty sure there is a lot of change in the next years coming, and we really need to see the benefits, how AI can be used to have a more efficient process, for example, planning process, in order then to focus on other areas when it comes to validity. But I think you cannot trust 100% AI so far, and then still there is criticism needed by the auditor, definitely.
I think the discretionality, right? It needs to be there, and the taking responsibility of the decision that we are making, right? It could be not AI the one having the responsibility of what we have choose to do, right, in businesses. I think that's
definitely. But I think what is challenging as well, and that's more from an auditor perspective at the end, how to get this criticism and expectation management. What do I expect in a good planning process is based on experience made by going through those steps, which definitely somehow will be replaced by AI. So it's an important facing challenge how get those younger consultants in our team in order to gain this experience, because some tasks may be replaced by AI. But let's see. Right now, I think it's a challenging and interesting shift we see, and everyone is learning.
I think that's a crucial part, learning. I think if, as me as a consultant, I think if we are not learning how AI can help us to be more effective, we are lost, so to say. Only the ones who take the challenge with it will survive, so to say, on AI, and keeping be needed, so to say, because I think the human part of taking the decisions and the warmth of humans, it will be still needed, and I think that's a crucial part. But we need to learn how to use it and how we can use it, for example, as a planning tool, right? Let's talk about the CFO's perspective. So, Alistair, especially when we talk about rolling forecasting and aligning growth with profitability, how does a modern planning and analysis approach can help these to stay ahead as a CFO?
So we have quite an integrated planning process now, and I'd say it's this access to operational data within the planning tool, as opposed to purely financial information, that enables that engagement with the wider business. So I think it's very important we have like finance business partners in place who have a really good understanding of the planning architecture, but also the operating business. But we actually want our VPs and our senior leadership to work directly in our planning tool. So, like, take an example, think of our support function, where we need to plan based on a number of tickets and expected deflection rate using an AI tool, and then resource based on our revenue growth profile and certain seasonal events which drive activity as well. Now, that requires cross-functional work between our people team, our finance team, our IT team, and our support team, if you want to take account of all of the operational data which actually would justify that resource plan, which I think is a lot more nuanced, and I hope in the long term a lot more accurate, gives us much better decisions than if we just said, well, revenue's grown by 20%, so let's try and get some efficiency and grow support by 15 and see where we get to. I think that's a nice example of how we pull departments together through using a single point of planning with all the different data sources in it.
Then you can, like, these forecasting, so to say, the decisions that we are going to make, or where you are making then for the future.
Yeah, so you'd have made the plan working together, but importantly, your plan will incorporate, it'll natively include a bunch of operating KPIs as well as financial KPIs. And this gives you so much stronger leading indicators when it comes to performance management through the year. Are we missing the operational KPIs? You'll see that long before you might see the numbers materialize in your financial statements. So it enables us to have a plan that we can actually use as a management tool and really help us through the year, and not just be a document of records which kind of proves that we have a going concern, but doesn't necessarily help us make the best possible commercial decisions at any point through the year.
Do you have any practical advice for finance leads that they just begin on this journal to planning and analysis?
Yes, I think so. So first thing, get the data architecture right. I think if you're pointing at several different sources of the same truth and you've got different truths coming out of that, that's going to be a pretty bad outcome. So get the data architecture right. So you for each item you've got one master and you know what it is. I think getting the mindset of the team right is important. I think if you have a team who are really dedicated to only working in Excel and really want to de-risk all of their work, and they don't want to run multiple scenarios, they don't like operating with a range as opposed to a single target, and that probably won't work either. So I think getting a very forward-thinking kind of tech-first team is there. I think the business partnering infrastructure I've already mentioned. If you're not really plugged into the wider organization, again, none of this can work that efficiently. I think over time that'll actually erode. I think by democratizing tools across the organization, the need for business partnering is hopefully actually diminished, but there's a transitional phase where it's really critical. And finally, I think like don't overcomplicate it, and in particular around the UI. So if you can get a tool with a simple UI, people will adopt it. If you start with the most complex version of the thing, it's very hard to get people on board because it's just a bit too difficult. So kind of start with simple models, start with a simple interface, and then you can add on the layers of complexity that you see as appropriate later.
Completely agree that easy way always wins too complex. Completely agree. So let's talk about the auditor perspective. So Sanja, as an auditor, you have seen the risk of Excel-based planning. Can you share insights from your experience?
Yes, so usually we're facing, I know a lot of buzzwords were used. So integration, which is pretty important, transparency and consistency. Those to handle in Excel are not that easy. I think what we usually observe is at the end to create somehow an database, or to have it integrated everything on the same Excel, different departments, multiple people working on it, and then having those changes and amendments and assumption documented somehow in a way that it's understandable for an external like an external, like an auditor is. It's pretty challenging. So especially for us, we were facing quite often asking our client to having a talk with the CFO, presenting the planning for the upcoming years, a detailed plan of the next 5 years business model. Usually we only get presented the balance sheet, P&L, and then the cash flow. So from an auditor perspective, in order to challenge this plan, which is made on multiple assumptions, for example, revenue projection, sales projection, and then how the costs, what we are expecting with the cost development, what is the external impact coming from, is not observable for us. So it is, from an auditor perspective, using an Excel sheet, hard to understand actually where those assumptions are coming from. At the end, we just see the product. We really need to have multiple meetings with the CFO, who is not always aware of every detailed plan from the operational department, like for example from HR or sales coming from. So we need, there is a lot of loops in order to perform this plausible check. And then what we observe for sure is that it's like, due to this highly manual process, a lot of errors arise that do some changes, maybe some formulas are not working anymore. Then as the sales department have updated this file, but for some circumstances, other files from other departments are not updated. So it's not an automatically process in here if some assumption changes were made, that at the end, the outflow, like for example, the balance sheet is then planned based on these changes. Those changes are not documented. I think at the end for an auditor is really important as well to have the changes in the document, to see what assumptions have been made change in order to check this plausibility. So as you can hear, it's pretty challenging. We need a lot of talks, meetings, which definitely, if you use a one source of truth, is much smoother and easier, because I can then at the end, in a good tool, see, okay, my revenues are planned based on this sales projection. I see from which countries and which products this is coming from. So I can go really deep dive in those assumptions made in this planning, which helps from an auditor perspective as well to perform those consistent checks. So just to give you an example, we often observe to have a really detailed sales projection, but at at the end, costs and the margin analysis are not aligned. So this should usually not happen if you use tools like XP&A, for example.
Sanja, when it comes to planning and reporting, transparency, consistency, and control are absolutely critical, especially from an audit perspective. What would you recommend it to organizations that wants to strengthen these areas of planning approach?
I think what is pretty important to have an really, I think for a good project and for an implementing tools like XP&A is to identify your key figures. Which are the key figures which are involved in this planning process? So which departments I need from the beginning in order to build up a smooth process. Because what we usually or often observe that we only talk with controlling, but controlling at the end is building on data which are coming from HR, sales department, or whatever. So really identify all the key people along your process and have them onboarded on time, because at the end this is an efficient process, and process it doesn't help to have just controlling included in this process, and then they are collecting this information, and at the end you always need to build up an efficient process. So when the sales department is preparing their sales projection, they need to do it and explain it directly, so you don't have, or you should focus on not losing information in communication. Especially then identify from which or where those informations are coming from. For example, HR, if they're using success factors, get those numbers integrated in XP&A as well. So collect all those data you need in order to generate automatization and to streamline the process here, and then bringing everything together with controlling and CFO department in order to prepare a standardized process where everyone is informed. Only then it can be efficient, I think.
Before we wrap up, let's do a quick round of rapid questions. So just please say what first comes to your mind. Okay. So first one will be one word to describe the future of finance.
Commercial.
Changing.
What is one planning fairy tale would you love to send permanent for vacation?
That you'll ever get it right.
It's done.
Excel, loyal companion, or necessary evil?
Loyal companion.
Agree.
What is one habit that every CFO should build?
Check that the business agrees with what your finance colleagues are telling you.
Understand your numbers.
What is one thing you will wish more people understood about your job?
Audit is fun.
Nice.
I actually want to spend more, but I really need you to give me the reason why.
What is your favorite way to unwind after a long day of planning?
I mean, I drink far too much.
Sport.
Okay, let's take a moment to reflect on today's conversation. Here are a few key takeaways. So the tension between growth and profitability is not going away, but smarter planning can help navigate it. Integrated planning connection that differ part of business, enabling faster, more informed decisions. Auditors are increasingly looking at the how behind the numbers and not just at what. AI is already helping automate the basics, but its real strength is in supporting strategic thinking. And finally, trust, both in data and in people, is the foundation of any success planning transformation. So, like that, we are coming to the end of Financing Flow. So, thank you both, for joining me today and for sharing your insights so openly. It has been a pleasure. To our listeners, thank you to turn into Finance in Flow. If you joined this episode, please subscribe, leave us a review, and share it to your network. We will be back in 2 weeks with another episode exploring the future in finance. Until then, keep leading with insight and innovation. See you in one of the next episodes.
This episode is brought to you by Lucanet, the CFO solution platform for future-ready finance leaders. Reimagine the way your finance team works with fully integrated workflows and enterprise-grade solutions for all your jobs to be done. From planning and consolidation to reporting, Lucanet connects people, data, and plans into a single source of truth, helping you deliver insights faster and with less complexity. Trusted by leading brands like Allianz, Bayer, Volkswagen, and Trivago, Lucanet empowers finance teams around the world to scale smarter. Learn more at lucanet.com.